You really don't have to look too far at the moment to see a lot of negative media around property prices at the moment across Australia. But a lot of these articles are heavily focusing on the Sydney and Melbourne markets, and for good reason. That is basically where half of the Australian population lives. But for the other half of the population, property prices are actually holding up really well. And today I want to talk about my local market of Cairns and 5 reasons why I'm extremely bullish on Cairns for the remainder of this year and well into next year, into 2023 and into the future. The first and biggest reason is supply. Supply of real estate really is at an extreme low, especially in my local region here of Cairns and across Australia as a whole. I recently did a video on supply and focused intensely on the supply issue that's confronting Australia as a whole, particularly in the rental market. So I will link to that one, so check that out. But I want to touch briefly on supply and how this is going to play a big role in keeping prices steady well into the future here in our local market. Now, to go back to October 2018, there was 470 open homes back in October of 2018, which is a lot of properties open for inspection, and that's in the Cairns region. If you fast forward through to today, you might think there might be half the amount of open homes. Maybe you might even think there's more, depending on the media outlets you've been looking at. But as in June, there was 156 open homes. So essentially a third of the properties available. So what that means is a buyer, if you're out there looking to purchase the right home, back in 2018, you might have had a choice of 10, 11, 12 properties that might tick your boxes. Where today, if you're in the marketplace, you might be lucky to find a single property that ticks all your criteria. And this is making it extremely difficult for buyers, so that when that new property does come to market, buyers are fighting over it, and that's helping hold up property prices in Cairns. The other big issue on the supply side of things is new construction. Construction has stayed basically extremely flat, bar a little pulse on the back of the building grants that were issued at the end of sort of 2020 to stimulate the economy. But other than that, we're seeing approvals sit at around 111 new approvals per month, which that's actual approvals. The actual numbers going through and being built is going to be lower than that 111. So it's only around 1,000 new homes being built per year. And with the population growing here in Cairns, it's not enough properties to satisfy the demand. So looking at the supply side of supply and demand, it makes me very bullish into the future for the Cairns region. The second big point that I want to talk about today is our price base here in Cairns. Between 2004 and 2008, property prices doubled here in Cairns. And then at the end of 2008, on the back of the GFC, we saw prices basically fall off a cliff, improve a little bit between 2010 and 2012, and then between 2012 and 2020, prices really remained quite steady. We didn't see really any real measurable growth over that 10-year period in Cairns. And it's really only on the back of 2020 through to now that we've actually seen substantial growth. And realistically, this growth is really just making up for that flat period of time, and we're still behind the 8 ball when you look at the growth chart overall. So it's not like we've had the big price runs of Sydney, Melbourne and even Brisbane over the last 3, 4, 5 years. So our cost base and price base really leaves a lot of room for future growth. Looking at the last year that has been, essentially house prices did go up a huge 16%, and unit prices a little bit more subdued, but we saw unit prices grow 8% the last year. So we are starting to see that growth, but I think that growth does have a long way to go before we start coming into that overpriced territory, especially when you compare the cost of what it costs to build a new property, especially new units, versus the established stock that is selling. I think we've got quite a lot of growth before we see developers really start to move in and build spec homes and spec units. So that's a real positive for prices leading into the future. The third big point that I want to talk about is our affordability here in Cairns. Now, the median house price is sitting at $440,000, and that makes it really resilient to interest rate rises. Obviously, if you're sitting in Sydney or Melbourne with a price point north of $1 million, and the interest rate rises come into effect as they have been, it's going to impact buyers a lot more. So in real terms, say you bought a medium price property for $440,000, you took out a $400,000 loan, interest rates went up 2%, you'd essentially be paying an extra $8,000 a year for that property, which for a lot of households, they can manage that, they can sustain that. Where if you're at $1 million home, buying $1 million property, you take out a $900,000 mortgage, essentially you're needing to come up with an extra $18,000 if we see a 2% interest rate rise, which an extra $10,000, an extra $18,000, comparing it to what interest rates were, that's where those property prices are really going to get hit by affordability as we see interest rates continue to rise over the next sort of 6 to 12 months before I think they'll start to plateau out. The fourth big factor that really cements Cairns property prices in my mind is our rental market. We have an extremely strong rental market at the moment, and conditions are basically at record lows. So if you are a tenant out there looking at finding a property to rent, or if you're an investor looking at finding tenants, essentially there is a massive over demand of tenants looking at a very limited supply. So that's a very strong point for the real estate market. We're not seeing an oversupply of rentals. It is extremely underfulfilled, the demand out there. And what this has done is led to considerable price increases over the last 12 months on the rental side of things. So currently houses are up a massive 18% over the last 12 months. The rental prices currently sitting at $495 per week for the average house, and units are up a massive 14% over the last 12 months, sitting at $380 per week. What this means in real terms though, is as an investor coming into the market, we've got some of the best investment yields on offer throughout Australia. For houses, our median rental yield is sitting at 5.8%, and for units it's sitting at 7.3%. These are some really strong yields, and yields that will insulate any sort of interest rate rises over the next 12 months, because the rental returns are so strong. It basically will keep those properties cash flow positive over the next period of time, or at the very least cash flow neutral. The other big thing that's often forgot about when people talk about rental yields is that it makes it attractive for tenants to get out of the rental market and start looking at buying properties when the rental yields get too strong, when property prices are too low compared to what people are paying in rent. And that's what we're seeing at the moment. We're seeing that the rental yields are outgrowing the actual sale prices. So if you look at houses, for instance, the rental price went up 18%, where we only saw a growth in house prices of 16%. So rents are outpacing the sale price growth, and this is going to make a lot of first home buyers really consider strongly buying into the market and getting into the market. And the other big trend that we're seeing at the moment, and I've sold quite a few properties recently is for family members buying properties for people to rent to that they've already got a relationship, be it their brother, their sister, their daughters, their sons, or maybe it's a friend of theirs. So people buying a property with already the tenant in mind to rent that property out, and essentially they're doing that to help those family and friends get into the rental market because it is so tight, but it's also encouraging them to buy those investment properties for that reason, as they've already got that trusted tenant in mind. My fifth and final point is that the Cairns tourism industry is absolutely booming. Tourism is one of our biggest industries here in Cairns, and it is alive and well. Over the school holidays, you could actually not book an Airbnb or a hotel room in Cairns. There was essentially nothing. We were absolutely full, and this is very much reflected when you look at the airport numbers. So the airport numbers for the school holidays were actually better than the pre-pandemic numbers. So over the months of April, May and June, we saw 1 million passengers come through our airport here in Cairns, and this really is reflected across the local economy. You go down the Esplanade of an evening and the Esplanade's pumping, the restaurants are pumping. On a Friday, Saturday, even in midweek, it can be hard to get a table at a restaurant. So it's really great to see that economy live and well, and it gives me a lot of optimism heading into the future that the tourism market's going to do well, and that will underpin the rest of our industries throughout the Cairns region, and especially property prices. So there you have it. That's 5 reasons why I'm extremely bullish on Cairns property prices heading into the rest of this year and heading into 2023. I think we're in a really good place, that we're going to see the growth, the what did we see? The 16% for houses and the 8% for units. I think that's just the start. I think things are going to continue to do really well over the next 3 or 4 years, and possibly we'll repeat that 2004 to 2008 where we saw prices double. I'd love to hear your feedback. Where do you see the Cairns market going? Absolutely leave me a comment below. And if you have enjoyed this video, make sure you subscribe. We're knocking on the door of 500 subscribers on our YouTube channel, and I'd love to see you join our channel and join our community here. Thanks for watching and have a fantastic day.